Welcome to Drill Down Earnings. We have quarterly results out from Oracle Corporation. This is their fourth fiscal quarter, the end of their fiscal year, and the business story about one stock on the move. The stock is moving. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology. This is one of the most important companies to me because I'm totally biased, so I'm warning you for a lot of reasons. Like, I love the people at Oracle, some people in particular, but the stock is one that I own, and that's a reason for you to confirm anything. I'm not giving you investment advice, whatever, but I want to tell you what I see in this quarter because it's a really good quarter. It's a beat. It's better than Wall Street expectations. It's better than my expectations. It beat almost all the numbers in my model. $15.9 billion in revenues, $1.70 in non-GAAP earnings per share. I don't pay attention to non-GAAP earnings per share. I pay attention to GAAP earnings per share, but $1.18 in GAAP earnings per share, also better than my expectations. Kind of across the line, all of their business units doing really well. And while the company not issuing formal guidance, like other companies do, the comments in the press release and in the conference call were just super bullish, again, according to me. But I'm going to let you look at the numbers. So revenue growth is now back to double digits for the first time since 2023, 11% revenue growth. They announced a dividend increase, so quarterly dividend up 25% to 50 cents a share. And the only reason you do that is if you think you're going to have cash flows working for a long time. But I want to get to that quote from the CEO, Safra Catz, an impressive person in so many accounts. But here's what she had to say. Sorry, I'm smitten by everything with this company. 25% was fiscal year 25 was a very good year, but we believe fiscal year 26 will be even better as our revenue growth rates will be dramatically higher. Furthermore, we expect our total cloud growth rate, applications plus infrastructure, that's their biggest business, we'll get to that, to be up 24% in fiscal year 2025 and over 40% the following year. She said RPOs, remaining performance obligations, will be up more than 100%, and those numbers are jaw-dropping. Don't believe me? Let me show you. But first, let's look at operating margins, not gross margins. Operating margins, essentially a profit margin of 31%, better than it was for this company when it was great 2 years ago. Oh my goodness. Cloud infrastructure revenues of 49% for them to $2.7 billion. Their Fusion Cloud ERP and NetSuite Cloud ERP, lovely, comparatively little businesses compared to the database business and stuff, so on, but 16% growth to $900 million. So the Oracle application software segment is doing quite well, but let's look at a couple of these segments here. So the biggest and most important one you always want to look at Oracle, most important thing, cloud services and license support. It is cranking. $11.698 billion in a quarter, up 14%. That's a huge business growing at double digits. They're in particular, if you look at their database multi-cloud revenues, up 92% with usage from Microsoft and Google and Amazon. Amazon and Oracle didn't even used to talk to each other. This is so impressive. Okay, so I mentioned why you look at cloud services and licenses. 74% of revenues this quarter was that one business. Cloud on-prem, also a good business, 13%. Hardware, 5%. That's the old Sun Microsystems business, but that's still working. And their services business of 8%. Let me show you how they're all doing. So cloud and on-prem, doing well, up 9%. Growth really rebounding after a weird quarter last time around. Hardware growth is back to 1%. They'll take it. But the real breakaway business is their cloud services and licenses business. The biggest business, growing at the fastest rate of anything they've got. The growth is dominated by the cloud and the business. If you look at the entire revenues, I call this chart a mountain chart. If you're watching us on Spotify or YouTube, the mountain chart shows you that they are just growing their biggest business better than all their other businesses, and it's doing well for them. And specifically, they talked about what AI is doing for this company. AI infrastructure consumption, I said AI infrastructure consumption was up 244% in GPU usage. So people are using the Oracle Cloud. They're not just booking deals. For AI training, Oracle launching their AI data platform, integrating ChatGPT, Grok, Llama, so ChatGPT from OpenAI, Grok from the fine folks at X, down the street here, it used to be called Twitter, Llama, of course, from Meta, Facebook. They're all using Oracle Database 23 AI with those integrations, and it's drawing a lot of GPU use. The Oracle data centers. How did the stock react? Stock sold off just for a quick second. bounced right up, down 7% as conference call was beginning. In the last year, the stock's up 44%. It's been a more exciting 44% than I wanted, because you could have gotten a 44% gain in this thing just since April. Really impressive. I mentioned RPOs, the total remaining performance obligations for this company. They gave us a jaw-dropping number of 130 million last quarter. Now it's 138 million. 48, just a really, really positive number for these guys. So many powerful things working for Oracle. Their database business growing so fast, their cloud business selling like crazy, the new customer signups, and a lot more to come with RPOs and revenue growth promised for next year and the year after that. Here's Oracle founder and Chief Technology Officer, Larry Ellison.
The future, the growth rate in multi-cloud is astonishing. In other words, our database is now moving very rapidly to the cloud. I think because a few reasons, because the database has now all these AI capabilities, but also, quite frankly, now people can get it in whatever cloud they want. If you're dedicated to using Microsoft Azure, you can get the Oracle database in Microsoft Azure. The fully capable Oracle database in Microsoft Azure, with all of our fanciest features, including the new AI features. You can get it at Google, you can get it at Amazon, you can get it at the Oracle Cloud. It's all the same in every place. And that's given our customers a lot of comfort that Oracle is not only where they store all of their current data, that they want to keep using the Oracle database and expand their use of the Oracle database and move all of that data to the cloud as quickly as they can. And they're now able to do it at the cloud of their choosing. So the database business is growing rapidly.
That's Larry being Larry, and that's how we like him. That's how I like him, at least. Not everybody loves it, but I sure do. But what's it all mean? What's your big drill down earnings takeaway, and what's the one number that tells us a whole lot, the drill down earnings bite? I've got that. So Oracle reporting fourth quarter earnings. I'm hopelessly biased about this company for a lot of reasons, not least of which I own the stock, but this is not investment advice. But here's essential summary. Tells you this was a really strong quarter for this company. $16 billion in revenues, 11% growth rate, double-digit growth on some of the biggest numbers ever in one quarter. But I promise you, the drill down earnings bite, and that's about those remaining performance obligations. So the remaining performance obligations are more than they've ever had before, but they're if you compare them as a percentage of revenue to the last year's revenue, which I think is fair, right? How much money is on the books for future contracts compared to what you actually just recognized? And that number used to be, less than 100%. It is now 240%. 240% RPOs are 240% larger than the trailing 12 months in revenue. A really strong quarter from Oracle, but really stronger bookings. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.